In the metals quadrant today, gold was all over the place with an initial rally that took the market up to 1532.20 and then a sell-off later in the day that took us below unchanged to 1496.80 and then slightly higher, about 0.25% up above unchanged, finishing above 1500. But again, a ton of volatility in the metals markets today, specifically in the gold contract. A lot of it had to do with the ECB announcement. More EU stimulus caused the rally, but didn't seem like it was enough to give the idea that there was going to be dovishness across central banks, across the gamut of central banks, even though we did also have a Turkish central bank cut. We're looking now toward the Fed meeting, and the probability in the CME Fed watch tool has actually taken it from prior 25 basis point cut at about 94%, and the probability of a 50 basis point cut at about 6%, changed to, we are currently at about a 90% probability of a 25 basis point cut by the Fed and about a 10% chance of no cut. And that's part of the reason that gold sold off the way it did, is the market was not really believing that this was an overly dovish, overly weak globe or global economy. And US data didn't help that at all. US CPI came out stronger than expected, with the target rate on the year-over-year inflation figures above the Fed's 2% level. And then jobless claims data was the lowest since mid-April. So the US data didn't really help either, continued the sell-off of gold. And then we also had some positive trade news, with President Trump delaying the increase of tariffs on $250 billion worth of goods from 25% to 30%. He delayed that increase all the way back to the middle of October. So we got a little bit more good news out of there after yesterday's concessions from China on certain products. So overall, the market for gold ended up higher off the ECB, but it was not enough to keep gold higher as we finished near unchanged.